Okay, so every once in a while, a stock does something that makes the entire market just stop and stare. Today, we're putting one of those moments under the microscope. We're going to decode a really wild single-day event for a company called 10 Holdings, ticker symbol XHLD.
Just look at that number for a second, 93%. And no, that's not its return for the year or even the month. That's the gain XHLD posted in one single day of trading. So the big question is, how on earth does that happen? And maybe more importantly, what could possibly happen next?
You know, a jump like this is basically the financial version of a lightning strike. It is sudden, it is powerful, and it leaves everyone wondering where it's going to strike next. So we're going to unravel this whole mystery, piece by piece, using the technical data to see what story it's trying to tell us.
All right, so every good investigation starts at the scene of the crime, right? Well, for us, that means we need to look at the hard data, the numbers, from October 28th to figure out what exactly went down. Okay, check this out. The first 4 days are pretty boring, right? The stock's just kind of drifting along. And then you get to that last row, October 28th, and boom, the price gap's way up at the open, touches almost 90 cents, and closes near 54. But the real story, the clue, is the volume. It went from about 24 million shares traded to nearly 700 million. That isn't just a little bit of interest, folks. That's a full-blown market frenzy.
So what lit the fuse here? Let's put on our detective hats, because the technical indicators from that day give us some really fascinating clues, and they all seem to suggest that this rally had some serious power behind it.
Our first piece of evidence comes from something called the ADX. Now, think of this like a horsepower meter for a trend. A low number means the stock is just idling, but this reading, close to 20, tells us the engine is starting to roar. It's not at full throttle yet. That's usually above 25. But it means this trend is just waking up and gaining serious power. This wasn't just random noise, it was the start of something big.
So if the ADX is the horsepower, the Arun oscillator is like the GPS, and it's telling us exactly which way this car is speeding. With the Arun up sitting at a perfect 100, the market was basically screaming at the top of its lungs that the direction was up. There was zero ambiguity here. All signs pointed to a massive bullish move.
And here's the thing, when you put all these clues together, the picture gets crystal clear. The stock didn't just go up, it absolutely blasted through its upper Bollinger Band. That's a key ceiling for a stock's price. That insane volume we saw, it confirms that everybody was piling in. And with the positive directional indicator, the plus DI, just dwarfing the negative one, it's proof that the buyers were in total command. It is a textbook recipe for a monster rally.
But just when the case for a continued rally seems totally locked in, this is where our investigation gets really complicated. A whole new set of clues pops up, and they're pointing in the complete opposite direction.
And this slide right here, it lays out the core conflict perfectly. On the one hand, you have all this evidence of massive momentum and strength. But for every bullish signal telling us this stock is a rocket ship, there's a bearish warning sign telling us that rocket ship might be about to run out of fuel. It's a classic battle between incredible strength and extreme exhaustion.
This is honestly the best way to think about the term overbought. Imagine a car's engine revving into the red zone on the tachometer. It's showing you incredible peak power, right? But you also know it can't stay there forever. That red line is a warning that the engine is under extreme stress and it's on the verge of overheating. That's exactly what these indicators are telling us about the stock. And here are those specific gauges that are flashing bright red. First, you've got the RSI, the Relative Strength Index. It's at 77. Now, for traders, anything over 70 is a classic sign that a stock is overbought. But then look at the CCI. It's at an astronomical 445. That is deep into extreme territory. Both of these are like that engine's temperature gauge screaming into the red, signaling this rally might have gone way too far, way too fast.
So, what do? We have two completely conflicting sets of evidence. One side says full speed ahead. The other side is yelling, brace for impact. So, what happens now? Well, the analysis lays out three distinct possibilities for where this stock could go.
So here's how this whole thing could play out. First, the bullish scenario. The frenzy isn't over. That high volume keeps up, and the stock makes a run for that 80-cent resistance level. Then you have the neutral case. The bulls and the bears basically fight to a draw, and the price just chops around sideways for a while. And the bearish scenario? Well, that engine finally overheats. The overbought signals win out, and the price pulls back hard, maybe falling all the way back to around 37 cents.
So what's the final verdict here? The report concludes that while the trend is undeniably upward, the whole situation is extremely speculative. What that really means is that it's packed with a ton of potential, but also a ton of risk. It's a high-stakes game, and the next big move is truly anyone's guess.
And really, that leaves us with the ultimate question for any trader or investor. The incredible story of this 93% surge is a perfect example of the beautiful chaos of the market. It's a clear battle between undeniable momentum and flashing red warning signs. The real challenge is figuring out which one is the true signal and which one is just the noise.